And since I find myself unexpectedly in the third great investment bubble of my career, basically in the US. So I can't avoid it. And this is a wonderful day to be having this discussion. It's not only victory over Hitler in Russia day, but it's also a day where the market is showing signs of breaking down. Through yesterday, it's the worst opening of a year for the S&P since I was 1 year old in 1939. I am a pre-war baby, unlike Ray. And of course, the NASDAQ is down as we speak, 27.5% from its high, and the Russell 2000 about 23, S&P about 15.5. So it's getting to be interesting. And as we were saying before, Bitcoin from some point in the last 24 hours is down 10% to 32,000 and change. So that is getting interesting. And ARK, Cathie Wood's wonderful instrument, is back to it where it was in 2018. I'm not kidding you. It is back below this entire event now, which is quite remarkable, down 75% from its peak, as is AMC, down 75% from its peak. And the other meme stocks are in ragged disarray. So this is the real McCoy, seems to be playing out pretty close to 2000. And so by early this year, it seemed clear to me that this was not only the real McCoy bubble, which had been clear for a year or so in terms of pricing and enthusiasm, but it had triggered this very rare indicator of impending doom. In other words, now. And so our piece of a year and a bit ago was called Waiting for the Last Dance. And our equivalent follow-up this January was Let the Wild Rumpus Begin, i.e., we're in it, dudes. And I do believe we are. And I believe the declines will be very substantial.
This is the third year of the expansion with a very aggressive monetary policy. And so we're in the part of the typical expansion where there's a lot of inflation pressures because it happened in a giant big way. And everybody's long, the world is it's the end of a paradigm because everybody believes that they want everything to go up. And of course, that creates a dynamic where policy is long, everything goes up. And of course, that happens by creating money and credit, debt, and which creates debt.
We have a market today which feels superficially like 2000. And I think it's going to play out initially like 2000. And then, unfortunately, is going to phase, as he suggests, into the 70s, where the deflationary effects on the economy and the stock market will result in a world rather like the 70s, where all assets are simply much lower priced than they are today. A word on inflation, too. I completely agree with Ray on the short-term problems, which I would summarize as monetary and general Federal Reserve overstimulus for 30, 35 years. And there's only one where, as the time period lengthens, the correlation drops, and that is resources. And resources drops to such good effect that based on the last 80 years of data, every rolling 10-year period, that the 10-year correlation is negative. So if you believe in inflation, you know that resources do very well. You also know that in the long run, it's strongly negative. It's negatively correlated modestly with the rest of the portfolio. As we're seeing today, when they do well, it puts a burden on the rest of the economy and they do badly. So there is a very strong case here for a resource portfolio. On resources, just a point that the last time we had a super bubble in commodities, there were very large new mines waiting to come online. What has happened since the 2011 crunch, when China slowed down in its heavy industrializing, and the growth rate for iron ore and coal dropped from double digit to zero, dead flat for 3 years in a row, breaking the back of the resource industry. They have not done any capex. It takes 5 to 15 years to bring on a mine. They have not been doing this. There are no great reserves of lithium, cobalt, copper, nickel, even iron ore to come online this time. And everybody knows it. If you look at the need for these, particularly green metals, greening metals, it doesn't compute. There are no backup resources. And that applies right across the length and breadth of resources. They have not been capexing, even in oil and gas, for the last 10 years, to a remarkable degree.
They say, be meek, look beneath the bed before you go to sleep. Keep on, I shine, you'll surely get burned if you reach out.